Good afternoon. Good afternoon, everybody. Good afternoon, and welcome to Paul's Monday Market Update, number 219 for Monday, 23rd of March, 2026. I hope you're all well. I hope you have had a good weekend. I hope you have been able to work your way through and make some sense of the rather sort of eventful morning that we've had in markets. As always, if you're joining us for the live session here or on the YouTube live stream, it'd be great to know that you can hear my voice and that you can see the slides. Always good to know the technology is working in our favor. For those of you joining us for the first time, the Monday Market Update is just that. It is literally me flying through as much as I can share with you in the next sort of 25, 30 minutes, looking at strength and weakness within FX indices and commodities markets, then looking at a few charts of interest, and then a look at the live markets themselves. It is not a signal service. It's not trade recommendations. It is just me sharing what I'm looking at, which might be of benefit or help to yourselves. As always, you are very welcome here, but just remember that you are responsible for your own trading decisions. And if you want a little bit more help and support, there is a special offer on the VTP Stage 2 Swing trading course and the VTP Stage 3 Intraday trading course. There's a special offer there until the 1st of April 26. It's the kind of end of the quarter, end of the financial year. If you want some more details on that, you can ping me, or that QR code there will take you. But it's a very special offer for basically this week alone. If you've got any questions, ping me. And if you want a little bit more education this afternoon at 2 o'clock London time, I will be running the Active Trades Monday Market Matters webinar. As I said, it's here we are getting towards the end of the month, end of the first quarter of the year, and actually, what I'm going to talk about is turn around your trading. If you've had a good quarter or if you've had a challenging quarter, there is always ways we can look at our trading and see what we can do to turn it around to make it better going into the next quarter. If you want to join us for that, you can register on the Active Trades website, or that QR code will take you there. Okay, so let's dig into the data. If you're new to trading or new to joining us, perhaps this may look a little bit overwhelming, but it's pretty simple once we get an understanding of what it's telling us. These are just clips out of my own weekend analysis, where I'm utilizing my own model, the STAM, to identify strength, trend, and momentum. It's the stuff that we talk about in the VTP Stage 2 in terms of swing trading. And I'm looking to identify where's the strength and where's the weakness in FX markets, indices, and commodities markets. Because when I do that, it helps me make better use of my time, energy, and resources throughout the week. So what is this telling us, and actually how can it help us? So let's just bring up the old drawing tools here. So here we are. We are into the 13th week of the year, 23rd of March. As I said, sort of final full week of the quarter and of the month. Where's the strength and where's the weakness? Well, of course, I do this normally on a sort of Saturday morning when I do it, and of course, the last few weeks, there's been lots going on either at the weekend, or, as we found out about an hour or so ago, this morning with Mr. President Trump's tweet about the sort of talks with the Iranians and the sort of cessation of hitting Iranian power plants for the next 5 days. And of course, that has shook markets up quite considerably this morning. But when I was looking at the overall, the sort of overall longer term strength and weakness, and where is that showing? Well, Aussie dollar was kind of still top of the pile, as it has been, as you can see, pretty much all of 2026 so far. I mentioned this on last week's session that, of course, they raised interest rates, the Royal Bank of Australia last week, but I wondered if it was a case of, buying the rumour and actually selling the news. And if we have time, we'll have a little look at Aussie dollar, because actually what I've seen is that we have worked our way a little bit lower off there from what had been a great trend in the Aussie dollar over the last few months. We still find that Swiss franc overall has been in second place. Okay, that has kind of meandered a little bit, shall we say? Part of that is, as we mentioned a few weeks ago, is that the SMB, who didn't raise rates or didn't change rates last week, but had been transparent for once about their interventions in markets, okay, to reduce the strength of the Swiss franc since the start of the sort of war in Iran. Um, we'll see as we look at the charts exactly how that is impacted and what we can make from that. What we all see, Canadian dollar, all right, is still holding into third place. No surprise based upon the sort of strength of oil that we had seen, although that is, of course, changing as we speak. Everything is unfolding. Dollar had been kind of middle of the park, but a lot of that just due to sort of let's say tactical strengthening, which we'll look at the dollar in a moment. But as I say, once again, that is changing a little bit. Euro was in fifth. Sterling had kind of fallen its way to sixth, and it's kind of a mixed package there. What we see in terms of what's going on there. On one side, okay, the UK data not terribly good. On another side, the impact in the kind of spike in energy has, of course, had a huge impact, to be fair, across all Western governments. But in particular, bond markets know that the UK is probably the least well prepared to deal with a spike in inflation due to the rise in energy prices. In fact, the UK is the UK cost of borrowing is more than Morocco. It's more than any of the other G7. They actually, even the city, they call it the moron premium, because that is the cost that is being paid to lend money to the UK government based upon the rather shambolic performances of Starmer, Reeves, Miliband, and Rayner. And so, interestingly, whilst there is no confidence there in UK government, and what we saw at the end of last week was the prediction markets. Okay, the prediction markets for a Starmer coup, in terms of being replaced by Rayner by the end of June, those numbers went through the roof towards the end of last week. Interestingly, whilst that has had an impact on gilts in terms of the price of gilts and yields, that means that invariably, that where we were looking at perhaps sort of two interest rate cuts in the UK, we're now already looking at perhaps two, perhaps three rate hikes. And even some of the talk this morning was about actually the first rate hike could come much faster than people expected. But of course, all of that was before President Trump's sort of comments there was about sort of 10, 11 o'clock about his conversations with Iran and his look at basically asking his Department of War to sort of cessate military attacks on power plants for the next 5 days, which is what he had threatened to sort of destroy if they didn't open the Straits of Hormuz I think it was by sort of 5 o'clock New York time today. I think certainly by the end of today. All of which has sort of thrown markets into a bit of a tiz, and we'll look at that as we play out. But as I said, they kind of the sort of the interest in those gilts, okay, and those yields has actually meant that that has kind of propped sterling up, and undoubtedly Starmer and Reeves will try and sell that as a way and a means of backing for their economic policies. It's nothing at all. It is more to do with the dollar and Trump's announcements and the way that is shaping markets. It's got nothing to do with those UK economic policies. But what we had seen is interestingly, we'd seen a couple of those doles, okay, sort of weakening, all right, in this morning session, with sterling and yen sort of doing well out of it. Interestingly, what we had also seen is that if I look here, okay, and this is more that on the BTP stage 2, is that, over the last few months, pretty much sterling has been in tactical or strategic sell environments. But actually what we have started to see against yen and against New Zealand dollar, which has completely collapsed, and we've actually started to see a bit of a shift towards buying environments for sterling against those. So I'm always kind of keen to sort of see that kind of the shift. It's almost like giving you an sort of insight into the underlying current and when's that changing. When we look at some of the indices, commodities, certainly, okay, when we were doing this data here, okay, at the weekend, pretty much all of them were in selling environments for all of those kind of major indexes that I sort of follow and trade. And Dow had basically been in strategic buy, okay, along with, strategic sell, along with the ASX, along with the DAX. But of course, if you've been watching markets over the last hour or so, they are changing rapidly. And so, let's have a look in a moment at what the live market is telling us and how we can use that to help us. It's kind of fascinating because actually, what we've seen is, of course, is Trump's comments have been saying that they've been having a chat and, they're going to get a resolution. If you listen to Iranian media, they are telling quite the opposite story, and about how Trump has basically retreated and how Iran is winning. Now, of course, it might be that Trump's just letting them say that because he's letting the kind of Iranian regime play to their home crowds. What we'll see is probably the truth is somewhere in the middle, and we'll probably find that out over the next 12 to 24 hours. And of course, that will undoubtedly have an impact upon markets as well. So, listen, I've been saying this for the last month or two. You make sure that you're always managing risk. You make sure that you're on top of the news flow where you can. You make sure you're on top of the order flow in terms of where's are we in risk on, risk off? Or are we in sort of strength? Where's the strength? Where's the weakness? You have to almost sort of keep an eye on that hour by hour basis at the moment. But welcome to trading, ladies and gentlemen. It's that volatility is what makes it interesting, but it also means that is what we have to make sure that we keep our sense of risk management, front and center during such interesting times. Before I kind of just switch across to some charts of interest, this is the picture from the latest picture from the STAM plugin, which is part of VTP Stage 2. As I said, that's what there is there special on this week. Listen, it gives me an up-to-date insight into the kind of the sort of 28 FX pairs that I look to focus on in terms of my swing trading, but really also it updates the strength v weakness. What have we seen here? Okay, well, the dollar. Okay, the dollar has the kind of holler to the top of the pile, dollar holler, based on the 4-hour charts. Will that be the same in 4 hours from now? That is a very good question. I wish I could give you the answer to it. We'll have to wait and see. As I said, everything's unfolding in front of us pretty rapidly. But you see dollar there, okay, top of the pile. Canadian dollar, okay, in second on 14. Aussie dollar, okay, has slipped to the 13. And if I look at the 4-hour charts, the weakness has kind of come into that Aussie over the 4-hour charts. And as I said last week, I thought Aussie topped out in terms of the way it had been running. I'll be intrigued to see if there is a switch this afternoon based upon the latest data. Swiss franc follows, euro then follows, okay, and then you've got sterling, Japanese yen, and Kiwi dollar. I mean, the real Kiwi dollar really has sort of pretty much collapsed. Japanese yen, well, once again, I think that's going to swing back and forth, okay, based upon people's interpretation of the news. Are they going to be risk on? Are they going to be risk off? Does this mean it's good, positive for Straits of Hormuz in terms of oil passing through there? That has a huge impact on Japan. So do not be surprised if you see some major swings, okay, not only today, but for the next few days. And as I keep repeating, make sure you are managing risk, okay, and make sure that you're on top of the news flow and order flow as much as you possibly can be. Okay, so let's switch across some charts of interest. Bear with me for a moment, and we'll switch across now. So here we go, a few charts of interest, okay, that are relevant or of interesting to us, okay. So what I've got here is, let's go up a little bit. This is Unusual Machines, UMAC, okay. Kind of curious about this because invariably what you can see is the change is pretty significant, okay, over the last week or two. So who are they? What are they interested? Well, Universal Machines, they're a kind of combined drone defense tech company. Okay. And of course, because of the nature of what they do and because of the nature of what's going on, there's been huge kind of interest in them, huge momentum in them. But they are, they're a small company, small float. And as you can see for yourself, there has been that retail participation has kind of led to increase in volatility. Okay. So it does have a sympathy flow with kind of defense and also sort of autonomous systems names, okay, of which there are a few others. But, it is very much a case of it being a sort of momentum driven. As you can see, when there's been some great runs, and there have been, you've had real sort of sharp upside momentum, but also you get some really kind of strong reversals. And this is why I was intrigued to see here. We popped up here to sort of $20, and then we kind of came down here at the end of last week. And interestingly, if I look at that, okay, we're just under. We kind of closed underneath 15. The pre-market is actually a little bit of a bump there. Okay, what's that about 40 odd 45 cents, okay, and a little bit of a bump, okay, off that. But I'll be curious to see if this kind of 5 day of sort of ceasefire, if that is the start of let's say a widening de-escalation. I'll be intrigued to see how that impacts defense companies, and in particular kind of small ones like here. I think there could be some great volatility in there. So for those of you who like to sort of trade intraday on stocks, you're definitely getting some moves on unusual machines at the moment. Okay, another one that's in a similar space, I suppose. Ondas, ONDS. Okay, this is the weekly chart. Okay, so in particular, they kind of focus on military communications, sort of drone comms, communications for drones, and that kind of whole narrative has not unsurprisingly been sort of gaining traction over the last over the last few years, which has also accelerated because of the events in Ukraine, and of course what we've also seen in the events in the Middle East. A little bit like Universal Machines, it's a small company, a small liquidity. Okay, so what that tends to mean is that you get exaggerated moves both on here on the weekly chart, but also on the intraday moves as well. Okay, and you can see that we've had a fantastic run from last summer. And we ran all the way up to $10. And I think last time we talked about it here, we were talking about how price was pivoting around $10. We came up first touch, we came all the way back down to the 20 period moving average. We popped up again up to 15, came back down, and once again, we're interested. I'm interested here. We are still pivoting around $10, but what I'm intrigued is that this is the blue 20 period moving average on the weekly chart. That is still acting as a dynamic support. But equally, what I'm also intrigued is that, the sort of the highs are getting lower, and I'm also getting a lot of wicks here to the upside as well. So it's a case of, my view would be, yes, we are pivoting, but we're also starting to squeeze. Okay. I would look at this as a bit of a coil building up, and it's a case of which way is it going to take us. Listen, the same with as Universal Machines. If we do get a de-escalation, then I would expect prices to kind of to drop. If we get continuation, all right, well then I would expect defense companies to at least have a little bit of a bump. But I don't think it'll be a big bump because invariably there is still that sort of paradox between defense companies doing well, but defense companies also needing lots of energy. And if energy prices, continue to rise because of continued conflict, well then, as I said, it's a bit of a paradox you get caught in. But at the moment, I see that as coiling up, and you might want to add that to your watch list. Okay, originally I was looking and wanted to talk about some of the companies that have been affected by, the sort of recent conflict and how that's been playing out. This is one of them, UAL, United Airlines. All right, so not unsurprisingly, an airline company. Weekly chart has been pretty well. You can see there's been some considerable swings here. Okay, left, right, and center. Firstly we had companies getting back to work and people being back to the office and people traveling. Then we had the new Trump administration and basically Doge Musk going in and wanting to cut all of the sort of public sector travel, okay, and flying, which had an impact upon those airlines. But then also, as you can see, from last from last year's sort of liberation, the kind of Trump taking up, Trump sort of cutting public sector spending, from Liberation Day, from basically pricing a way up, and then actually what we've seen is this. What you'd also see is like almost like there's a top there between what would you say about $115 between that kind of 112 to 116 range. You might say, well, Paul, let's bring up this drawing tool, Paul. This is a bit of a double top here that we have seen here. Also, all of the highs have been getting low, and then invariably what we can see is price has pushed its way down, and it's beneath the 50-period moving average. And now what I'm looking at is, looking at a pure price action. Last week was a kind of inside bar, bearish pin bar that was, had flipped the 50. And so I was curious to see how did this play out this week in terms of, did we get continuation of the war? In which case I thought, we might work our way all the way down towards that weekly 200. But of course, as I said, things have changed in the last 90 minutes or so. Well, there's been a shift. Whether there'll be momentum behind that, whether that'll be sustained, we will find out. But as you can see, from closing just under $90, well, we can see in the pre-market already we're up $5. Okay, and that's probably an indication of some, there's a bit of a relief rally. And as I said, what we want to see is, well, can that carry on? Has it got the legs to carry that on? For me, if it gets to close back up above the 50 at the end of this week, okay, end of this month, then that would be, I think that would mean that, we're kind of expecting probably sort of to drift back towards 100. But if we find out it's a bit of a false dawn for what Trump has announced today, well, then I expect there just to be that relief rally to run out of gas and for it to roll over and fall away. So, yeah, as I said, pretty interesting chart to watch this week. Next, okay, is Carnival. All right, Carnival, they have got their earnings this week. Okay, it's a bit of a thin, quiet week, but they've got their earnings Friday before the market. Not unsurprisingly, Carnival, okay, hugely impacted by events going on in the world for two reasons. A, people are much less likely to book cruises, certainly to hot parts of the world in every sense of the word, and also spikes in oil prices not good if you're trying to drive big cruise liners around the world, are they? So what can we say is, well, once again, there has been some real good swings on the weekly chart here, okay, and it's what I like to kind of operate off for, certainly for stocks, because I think it's just, yeah, I think there's just some good moves there. But what I was curious about this is, we can see that, kind of late last year, we came back down to the weekly 50 and we bounced off it kind of very nicely up above $30. We were actually starting to make kind of pushes to sort of, to new highs. And then invariably the events of the last month or so, well, you can see that basically has just, completely rug pulled the Carnival share price to the extent, bit like UAL, we're beneath the 50-period moving average, okay, and we were continuing to drop. But last week we finished at $24.12. Okay, the pre-market was at $25.65. Okay, so as I said, there's a bit of a relief rally, and we will all be intrigued to see, does it have any legs? All right, for me, it has to get back up above that weekly 50, perhaps even that weekly 20. If it does that quickly, that would give me an indication that, might have legs, or does it pop up? And as I say, it's a false dawn and we sort of drop down to $20. So yeah, it's kind of curious to watch. Okay, it's curious to watch to see how that is going to play out. All right, listen, there's a few charts of interest you might want to add to your watch list and see how they play out. Let us now have a look at the actual live markets themselves. So let's just let's see what's going on here. I am gonna, that's the sort of stage 2 plugin, but what I'm gonna think we're gonna do here is I'm gonna sort of maybe let's see. Right, why is it? Here we go. Bear with me a moment. It's just, I think, yeah, there we go. So, boom, just kind of looking at those charts there. Just yeah, this is just the intraday here. This the intraday markets here. Just because curious to see what's going on here. So, intraday Dow 30 minutes, Nasdaq on the 30 minutes, S&P 500 on 30 minutes, DAX on the 30 minutes, oil on the 30-minute chart, Brent, gold and silver. Okay, so normally I look at these in the weekly charts, but because of what's happening, I think today we'll just have a little bit of a look at the how markets reacted to that news, and you can see for yourself what's going on there. That has been quite some relief rally. So from where were we? What's that? 45,240 to 46,800. I mean, that's just an astonishing. That is just quite an astonishing move there. Okay, even in that sort of down. Let's just look at that. Yeah. 45,290 to 46,990. I mean, that's just an astonishing move there, isn't it? That's 70. What's that? Just about 1,700, just over 1,700 points in a 30-minute move there. There's lots we can learn from this. All right. As you hear me always banging on about, basically making sure you're managing risk, and especially during times of conflict, making sure you're on top of news flow and order flow. But there's also that other element of, this is the impact that Trump has. What one tweet it has this kind of impact on markets, and it's just whether you love the man or whether you loathe the man, we are living in Trump's world, and as I said, you could love him or loathe him, but you have to accept that that's the way these markets are going to operate. Hence why, you make sure you manage risk, you make sure you keep on top of the news flow and order flow. There's just no other way to do it. And if you found that these markets have been too volatile for you to trade, that is absolutely fine. Okay, that is absolutely fine. All right, don't feel like that. You are losing out if you've been sat on the sidelines watching this because you're not really sure what's going on. That is absolutely perfectly fine. Okay, your rule one as a trader is to live to fight another day. Okay, and especially kind of if you're trading through like retail brokers with the best will in the world. During periods like this, you're going to find spreads will widen, execution will be much poorer, and you have to take that account into your trading. But let's have a quick look at some of these charts. All right, of course, let's let's have a little look at oil. Okay, so we can see where oil had been pumping around. Okay, but you can see for yourself, today's candles how we're looking to sort of to shape up there. Right, that is just literally. Bang! You can see the 4-hour chart is just rolling its way over there as well. What for me is nice as an intraday trader is kind of just like basically that's a VTP stage 3 Pac-Man trade. Okay, and it just you can see the move for yourself there. And as I said, I can't add a massive insight because this is unfolding as we speak, and as I said, I think people will be intrigued to see what the Iranians say, but also what the Iranians do. If they spend this afternoon trying to attack tankers that are going through the Straits of Hormuz, well then, then all bets are off, aren't they? Because I think that will just anger the Americans and Trump, and and they will redouble their efforts. But if we do get a few days of de-escalation, well, then, people will be intrigued to see, well, is that the start of something? Is that the start, is that start of, what was it Churchill said, not the beginning of the end, but the end of the beginning. And it might well be that's where that's what we look at and work on there. So, yeah, be prepared for an interesting session at market open on those US markets. Okay, that might work its way down there. What is also curious to us is that we had seen. Let's have a quick look at gold. Okay, so these are not the normal charts that I kind of work off, but let's just put this around here. So you've got a reference point here. Bang. Okay, about $5,000. Okay, and I said last week that I thought it was sort of sat on 5,000. Okay, and was it going to act as support, or if it broke, we could see significant moves down. But we saw it broke, but even I did not expect the kind of significant moves we've come down there. You can see all the way down to that daily 200, and then it's bounced there this morning. That has just been last week was, as I said, we were here last week. It was just sat on that on the 5,000 level. I said it was like a descending triangle, a 4-hour descending triangle, and it broke, and that was quite some significant move. But once again, we can see how that basically has changed this morning. Okay, we had overnight real sort of volatility there, but that has been quite some turnaround. I suspect there will be lots of people who are on the wrong side of these moves now. Okay, so so once again, as I said, if you're a new trader and you're sat watching this, trying to work out what's going on, that's absolutely fine. There's nothing that says that you have to embrace the risk. Okay, there's nothing that says you can just sit and watch and learn to see how markets react and operate in such environments. Okay, but as I said, you manage risk first and foremost because of that particular swing. And we've seen that swing in silver as well. Silver, for those of you who joined us last week, okay, I talked about, let's just get on this chart here. Here you go. That's not the, here we go. Let me just update these. As I said, these are not the normal charts I'll work with, but it's good enough for us what we're here. As I said, last week, 4-hour chart, I was here, and we were here sat on $80. This is the 4-hour chart, $80 there. Once again, that kind of descending triangle building up. And then, as you can see, not only did we drop from 80, but we went through 70. And we actually, this morning, we sort of tickled the soft underbelly of 60. We're getting down to just sub 61. But once again, we've had that kind of, that major turnaround there. And as I said, we're just going to have to watch to see how this goes into the US Open, all right? Into the US Open, into the session. There's no kind of major US data, all right, for today. That's standard for Monday. We've got a bit of PMI data tomorrow, but really, this is going to be the Trump comment and the market's reaction, and also the Iranian reaction. That is going to be the driver for, well, certainly for the next 24 hours, okay, to sort of watch and see how that particularly plays out. Let us have a look at what we'll do is I'm just going to put this on here. Oh, it seems to have been, maybe that's frozen up a little bit. I think it might have done. Okay, so let us go and have a look at UK sterling. All right, let's see how that has worked out there. So, yeah, let's have a talk about UK sterling, because I appreciate we've overran a little bit, but there's been so much to share with you, hasn't there? So kind of quite some moves there. Okay, quite some historic moves. Okay, so let me just bring this up and let's put this into. I'm going to put these onto the daily charts here. Okay, can we talk about it? It's another interesting session this morning. As I said earlier in the presentation, what we saw was a case of at the end of last week, we saw a case of the gilts. Okay, their gilts and in particular their yields absolutely skyrocketing right towards the end of the week, which was a mixture of, as I said earlier, of both UK incompetence in terms of government incompetence, but also just the general reaction to what many people thought was the kind of longer extension going into the sort of into this Iranian conflict. What have I got here? What can we look at? So I've got cable on the daily, euro sterling, pound Aussie, pound Canadian, pound yen, pound Swiss, pound Kiwi, and the FTSE. All right. So we've had a look at just a few of those indexes. So let's start with the FTSE as well. FTSE, what had been a fantastic trend, we dropped and we broke 10,000. Okay, we've dropped and broke 10,000. Okay, you can see for yourself there. We're now coming back to sort of tickle the soft underbelly of 10,000. All right, so we'll see how that particularly plays out. Okay, on for the rest of this session. Everybody will be waiting to see, well, actually, what happens when the American market's open. But you can see for yourself, if you look at that for March, that is just quite some shock of a move there. Certainly this morning, okay, we were pushing down, but you can see for yourself that Trump comment there, just boom, relief rally. That is an absolute relief rally, and everybody's going to be able to see what happens. Personally, I think we get to 10. See how 10,000 had acted as support here, acted as support until it didn't. I'll be curious to see, does it flip from being support to resistance, or is there such kind of a relief rally giddiness that we slice through 10 and continue up? If we do, well, that to me tells me that markets are taking Trump's words as real, and that there's going to be some sort of de-escalation or resolution. That's the way I would be looking at. That's the way I'd be looking at that. But let's have a look at sterling cable. Well, what we can see is that basically the daily chart in sterling, we had effectively had sterling weakness and dollar strength, and then you can see over the last couple of weeks, it's just been, in fact, the whole of March really has just been those shenanigans there as prices kind of worked its way back and forth there. If I look at that on the 4-hour chart, there's been some swings on there, but of course some of those swings have just literally been pretty violent because of reflections on the conflict in Iran, Trump's comments, the impact on oil prices, etc. But you can see for yourself that if we go down to the intraday, this morning we pushed a little bit lower, right? Okay, and then but bang, that is relief rally, risk gone, dollar strength gone. That's the way I would be looking at that. Okay, that's the way I'd be looking at that. That's what I see there. Okay, and we'll probably see that across all of those dollar pairs. Pound against Japanese yen. I've talked about how on the weekly chart, I wondered if this is what I'd call diamonds, as we get a broadening formation and then a kind of coiling formation there. And I was kind of curious that kind of the daily chart, it is grinding its way up, but I wouldn't exactly say it's a beautiful thing. A lot of that is Japanese yen affected very much by the price of oils, as are the UK. It's literally the Japan imports, I think, 95% of its oil. The UK Miliband net zero delusional nonsense means that we're paying more for energy than we need to here in the UK, and so it's kind of a it's a mixed bag there in terms of what we're particularly interested in or looking at. If we look at euro sterling, I mean, euro sterling on the daily chart has been all over. I posted last week how we were coiling up here. This is the daily chart. Price was coiling up. And we got a false breakout to make a kind of this bottom around, what's that, around about 86.20, and then we bounced off it quite nicely. But then today we've had kind of swings in that as well, considerable swings. Euro sterling has not been the nicest thing to sort of to trade over the last last 2 months, I'd say. Okay, intraday it's been fine, but as a kind of swing trader, not been particularly easy. You can look at that 4-hour chart there. Okay, just if you're trying to be a swing trader, that is challenging. All right, especially when we've got moves here. But then we're seeing that kind of euro weakness creeping in there. Right, that's yeah, I'll be intrigued to see how that particularly plays out. And I mentioned, let's just finish on pound Aussie for a change. This is pound Aussie. Pound Aussie has been in a great trend. Okay, sterling weakness, Aussie strength. That's the way we like to play it. VTP stage 2. Okay, that's the trade for us. Buying strength, selling weakness. And it has been a great trend, but all good trends come to an end. And I was talking about it the last week or two that, were we actually starting to see a reversal in that? Was that kind of Aussie a case of buying the rumor, selling the news? Okay. And once they confirmed that second rate hike last week, was that the kind of the end, the top of this, or in this case, the bottom of that particular run? And certainly we've seen that kind of that move away. If we look at that 4-hour chart from where we were, okay, we've formed a bit of a kind of a higher low there, and as you can see, kind of Aussie, and across a few of them, there has been that sort of a bit of Aussie weakness, and I'd say Aussie weakness more so than sterling strength, but that sterling strength story might come back because of the if we are looking at hikes in interest rates. But once again, that story itself could swing again this these next couple of days as we sort of as everybody waits to see what the score on the door is with regarding to the Iran situation. Okay, ladies and gentlemen, let's draw it to a close there. I appreciate that we overran a bit, and I appreciate that I do fly through these things. I'm just trying to share with you as much as I possibly can, given the sort of the time, and also the fact that what is going on in the world, it's changing on an hourly basis. So as I've said many times today, make sure that you're on top of your risk management. Make sure you're on top of the order flow. Make sure that you're able to sort of make good choices. Okay, don't be chasing markets. You don't need to do that. Okay, just watch and wait. All right, for the good trades, because they will be there. Okay, have a fabulous trading week, everybody. I wish you the best of success in your endeavors, and I'll speak to you soon. Take care and trade well, everybody. Cheers.